Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
In this lesson, we will take a look at best practices for tax advisors as prescribed by the Internal Revenue Service. In addition to the other rules and regulations set forth by the IRS to govern the practice of accounting and tax advising, Treasury Department Circular number 230 lists several best practices to provide general guidance to the practitioner. These practices, when followed, will allow the practitioner to provide clients with the highest quality representation in tax issues. There are 4 best practices to keep in mind. First, practitioners must always communicate clearly with clients. This includes understanding the client's expected purpose for and use of the practitioner's advice. The client must also be made to understand the scope of the advice or assistance that the practitioner can provide. Second, practitioners must become competent fact finders. This includes gathering all of the facts available, determining which facts are useful and relevant, relating the applicable law, and arriving at a conclusion only after taking all relevant facts and laws into consideration. Third, practitioners must be forthright when advising clients regarding the importance of conclusions reached. For example, a practitioner must advise clients of potential fines and penalties that may be avoided if taxpayers act in reliance on the practitioner's advice. Finally, and quite simply put, practitioners must act fairly and with integrity with respect to the entire scope of practice before the Internal Revenue Service.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.